Welcome to you, sir. And we are starting this session. Remember, National Stock Exchange set up sometime in early 90s. Now has a market cap which is actually more than India's GDP, right? About $5+ trillion. And that really gives you an idea of the kind of market participation we are seeing. Some of those things we'll discuss. Let me just get a sense of how involved, educated the audience is about markets. How many sitting here actually invest, have a demat account? 60%? This is actually less than India's national average, which is about 99%, right? Mr. Chauhan, you can pick the mic.
Yep. Today, India has around 10.5 crore unique investors with 20 crore accounts on NSE. 10.5 crore unique PAN number having accounts is like 20% of India's households directly investing through NSE. And that was like 1/4. That was 2.5% even in 2019 when, or 2020 when COVID started. So literally in last 4 years, we have gathered 4 times more people. And that's when people tell me, why did this happen? Of course, it became a very fast movement. Today, there are only 30 pin codes. India has around 19,300 pin codes, out of which only 30 pin codes do not have NSE registered investor. I have investors in Andaman Nicobar. I have investors in Ladakh. I have investors in every single corner of India except 30 pin codes, and most of them are airports where nobody stays full time. Why I'm telling you this has not happened because government has forced it. This happened from within. And why it happens is because, of course, the KYC norms have become now video-based so that people are able to do it on mobile. But also, in last 10 years, India has become prosperous, whether we accept or not, whether we are in ruling party, opposition party. India in last 10 years has become prosperous. 20% of India's population directly investing in India's entrepreneurs is a great leap of faith. Right. See, if you look at the economy, economics books, they say that countries having per capita poor income, lower income, cannot have a stock market which is well functioning because poor people don't save, and if they save, they don't trust even their brothers. How come people sitting in Jammu, sitting in Srinagar, sitting in Dibrugarh, Jorhat, investing in a company in Salem, they are in Tamil Nadu, they are never going to visit? How come those people have that trust? Right. That I am putting 1,000 rupees for Americans, 1,000 rupees is only $12. But that 1,000 rupees, that person, that she's putting her hard-earned money, sitting in Dibrugarh, putting in Salem company in Tamil Nadu, never going to visit, she has that leap of faith. Faith on whom? India's parliament, India's judiciary, India's ministry, India's regulator, India's stock market, but more importantly, India's entrepreneurs. We may blame them for anything, but Indian public today trusts our entrepreneurs more than anyone else. And let's face it, $5.4 trillion of market cap, 1/3 of India's wealth is now wealth of trust. Trust of small little people, that 10.5 crore small little people investing in whoever you can blame, whoever we want to call names. Those are the people directly putting their hard-earned money there, not in you.
That's a big point you are making, because sort of a political narrative is sought to be built that somehow these wealth creators are bad people, and the focus should be on wealth redistribution and not wealth creation. But what you are saying is that people of India actually trust wealth creators, and they are putting their money where their mouth is and backing them up, right?
Absolutely. And for me, I call that in last 77 years of our independence, what has India achieved? It has become more trustful nation. Trustful of its entrepreneurs. There is no better service than creating wealth and also creating jobs for this country.
Amazing. Look at the contrast, right? If you look at political news, you sort of get an impression that things are not good, things are bad, and you can't trust the wealth creators, there are no jobs. And actually, in reality, the fact that the market capitalization of NSE is much more than India's GDP, is a reflection of how much trust people have in wealth creation as an idea, as a theme. And so let's take it forward. With all that's happening in the geopolitical stage, how are we, you gave the numbers of the last 10 years, how we have quadrupled the number of people participating, people from Dibrugarh to Jorhat to Jammu and Kashmir to Andaman Nicobar. Actually, let's look at this way. What has happened in the last 10 years that people have become more trusting of wealth creation?
Again, to give you numbers, when Mr. Modi took over in 2014, I think the total market capitalization, that is the wealth represented by stock markets, was around 65 lakh crore. Today, it's 440 lakh crore, 6.5 times.
Right.
650%, 6.5 times wealth that is represented by markets. Markets basically is a democracy of stock markets.
Right.
Because every investor has a vote, right? And in some ways, our corporate governance has improved way beyond what you hear in all the allegations coming from abroad. Today, India does not allow golden shares or preferential votings for specific shares.
Right.
It also ensures that the small investors have better rights when the AGMs happen vis-a-vis the promoters of the companies. And many other things which no other country in the world has. They want to keep on saying that you have a bad corporate governance. Today, we are amongst the top 3, top 4 in the world in terms of corporate governance. And why? And outcomes you have to see. Today, after US, Japan and China, 4th largest market is India. Per capita income is $3,000. China, $18,000. Japan, probably $36,000. America, $66,000. At $3,000 per capita, there is no similar market. At $6,000, there is no market of this type. $12,000, there is no such market. $24,000, there is one market called China, where if markets go down, government has to go and buy, which they are currently doing. You might have seen today also $1 trillion of buying, right? For me, in India, the government doesn't buy anything. They only tax us. But still, we have created this market, and it's not happened overnight. It has happened because the regulators have worked hard. The parliament has ensured that the framework is created. But most importantly, the entrepreneurs have worked hard to create that trust. I say that NSE is the place where India trusts itself.
Right.
And that is a market for trust. It's very difficult to create, very easy to give up. And 10.5 crore individuals is now competing with the number of farmers in India.
Right.
So be aware that that's becoming also a very large constituency.
How many farmers you said?
That's competing with the number of farmers in India.
Right. Right. Okay. So you see, if we are $5.5 trillion with a $4 trillion GDP, and we have been discussing about $50 trillion of GDP by 2047, what would be the size of India's stock market?
The way I look at it is that the $15 trillion is a small number compared to what can be achieved. But besides that, the way I look at it is today we are 1.5 times or 1.4 times the GDP in terms of the market capitalization. So and we were not even half the size of GDP even 15 years back.
Right.
So over a period, we have become more financialized. In fact, there are worries now of over-financialization. For 30 years, from 1991 to 2021, we kept on saying we need to have everyone included in the finance. Now, people are now getting worried about everyone has got included, now what? It's becoming over-financialization. That's the worry for me. It's going to continue in the same pace. We are going to have probably from 10 crore investors to 50, 60 crore investors in next 27 years or 23 years.
Right.
But more importantly, if India's GDP goes to say 25, 30 trillion dollars, the market cap will be close to $50 trillion.
Okay. So since you are here, I can't miss the opportunity of getting some headlines also, some news point. And there is a larger audience watching. So my question is, We have seen the RBI governor, for example, mention this, even other observers, that there is a bit of a froth in the market as we speak. And this is despite the FII selling. So the two questions. One, FII selling, is it an area of concern? And two, this froth despite that money going out. How do you see that?
No, in a way, all this are connected. And all this also have the repercussions from the world. Why FIIs are taking money out is because of variety of reasons. One of them is what we call indexation. Most of the investments today across the world, especially in developed countries, is that they invest on basis of index and not basis of the stocks. And those fund managers decide that they want to take a particular index called MSCI Emerging Market Index. And in that, if a country's weight and each individual company's weight goes down for a variety of reasons, so recently China issued a stimulus of $1 trillion, suddenly their market price went up by almost 25% in one day, which means that our weight came down a little bit. So what was built up over a period, some portion tried to go there. But the other side, there was a feeling that when the new government comes in US, the interest rates will go down. The Federal Reserve is trying to bring down the interest rates. Even yesterday, day before yesterday, they have brought down a little.
Yes.
But 1 month back, despite all the expectations, the interest rate started going up in America because there was a perception that new government, whichever government comes in, will have a huge deficit. And they will have to actually increase the interest rate because now their total debt of America has now gone up to $35 trillion. And they are raising $1 trillion more literally every 2 months, 3 months.
Right.
So it's going to be impossible for them to keep the interest rates down. Once the interest rates go up, people who are borrowing in America at a very low interest and assuming that it's going to go down, suddenly it's called carry trade.
Yes.
So they were investing into other countries like India. Yeah. They had to take it back. Now, when the new president takes over, they will have a better understanding of how this carry trade plays. And those are the things why the Indian markets went down a little bit in last few years, last few months. But in terms of the fraud, of course, the markets have been continuously going up across the world, but largely in India and US for many years now. And there are companies which have not had those kind of profits also have got great valuations. And so slowly, there will be a differential coming up between the companies which are doing well and companies that are not doing so well. But that is bound to happen in any markets, which are risk markets.
So in a way, you're saying that the correction is good.
And why corrections have happened on a larger scale, but individually, each company, when the results time come, you will see the company has given better results, their prices remain up or go up, and the companies which do not give better results will have to go down. That's how, because why do the prices of stock markets go up or down is on the promise of the profits which you get to share. That's why it's called share.
Yeah.
Right? So if that profit is going to go up, the wealth which it represents will go up. If it's going to go down, that's what you expect. That price will go down.
So while talking to you, I realized that you have an academics streak also, like explaining things. One other way of interpreting this FII outflow not impacting the markets much is that the kind of confidence that you were talking about, trust factor, the kind of confidence that Indians have in their own nation today, in their own government today, in their own corporates today, in their own wealth creators today, in their own startups today, the DIIs are coming in, the investors are coming. And that's why perhaps you mentioned that the over-financialization is a concern, right?
The over-financialization is now being discussed in some of the academic circles as a part of worry, because the rest of the world is now talking about over-financialization. We have not even reached even a surface. We have not even scratched the surface, because in America, somebody talks over-financialization now. Of course, our academics have to talk, right? That is the purpose.
Yeah. All right, but the fact that all this FII outflow, or now the FPO outflow, if it happens to the US, is not impacting our markets as much as it might have earlier, is a proof that we are trusting our own systems.
And also the fact that earlier people used to invest in gold, real estate and other things. Today, because of ease of investment, but also because of the confidence and also awareness in younger population. Today, younger people are earning more than their parents at their retirement age, assuming the parents are working. And they have more consumption, but they also have more saving. And they are more aware that today, if you took it, today itself, Morgan Stanley report has come out, that India saves 3% in equities. Only 3%. Over last 10 years, 20% of new wealth created is only by stock markets. Although it's investing only 3%, so input is 3%, output is 8%. But the fixed deposits or gold or real estate, if you input more, because instead of here it's only 3%, 97% is elsewhere, and still the output is much lower because the stock markets are now giving better returns continuously. Of course, it's a risk market. Sometimes they may go down also, but there has been a clear understanding by the masses that this is also a good alternative, and of course, it is also tax beneficial to invest in stock markets. But over and above, the returns themselves have proved that stock markets, which also creates more jobs, because it creates a virtuous cycle. If you put in money in stocks, then it goes into the company. Once it goes into the company, company creates more jobs, which means more people getting more money. They again invest in the stocks. And that is the virtuous cycle that gets created. That has now been created over last 10, 15 years. And there is no other similar market in the world.
Right. You also mentioned that over-financialization is not a concern for us. One area that I see is that while there is a quantum jump that has happened in terms of all these demat accounts that have opened, and you're saying from Kashmir to Assam to Andaman, everywhere there are accounts now, still, in terms of market cap investment, there are only a few states that really dominate, with Maharashtra accounting for about 1/5, Gujarat accounting for 1/10. There are some districts like Rajkot, for example, would have a lion's share. So in a way, there is regional disparity. How do you address that?
It was surprising. A few months back, I went to Himachal for their Uttarakhand for their industrial event. And I said, probably they are not doing so well in the investors' population. So I just looked at the number, and almost 9% of Uttarakhand population is actually a direct investor into Indian stock markets. Today, the largest state which has the largest number of investors are actually UP.
Really?
Yeah. So many of us, in fact, 5 years back, when after the budget of Madam Nirmala ji, I was on a television channel, and the anchor at the end told that since the budget is good, few lakh people in India will be happy. And I said, no, it's 2.5 crore. Today, it is 10.5 crore, right? And of course, if you take their families, 8 crore families is actually almost 35 crore people, which is 1/4 of India. And that is what we need to be aware, that today in India, everyone is now either a stock market investor or wanting to become stock market investor.
All right. Okay, so when I was preparing, I asked a friend, what should I be asking Mr. Chauhan? And he forwarded me an article written by Ajay Bagga. He's there in front of you. And so the argument Mr. Bagga is making in that article is that with Trump coming in the United States, there are going to be headwinds. And so the tariff wall that he's talking about is going to actually impact India's exporters. So do you see that getting factored in the market, and if yes, to what extent?
In fact, yesterday, if you saw our External Affairs Minister's statement, that other people may be worried, we are happy. Almost that was the tone of his statement. Why?
Yeah.
Because the way I look at this, people don't understand the details of the trade. What the tariffs are going to be is for merchandise trade. We are hardly having much of a merchandise trade on a net basis with America. What we have is actually services exports, which is not part of that trade itself. Right? And with GCC, that is like global capacity centers, where today, if you look at you name an American company which may not have even a business in India, has 25,000, 50,000 people in India, in Pune, in Bangalore, in Jaipur, in Indore, right? So to give you a company name which I specifically know, there is a company called Boni, we call it Boni, it's not Boni M, but it's called Bank of New York Mellon, okay? It's the same Boni M, but different Boni M.
Right.
And they account for almost 30, 40 trillion dollars of the custody business. They have at least 25 to 30,000 people in Pune. They have no business in India.
At their GCC.
They are GCC, right? So people don't understand when they talk about headwinds. The headwind is largely between China and America. China was declared $1 trillion of trade surplus last week. Compared to the rest of the world. And that's a matter of worry for many. But we are into services, and that's why people don't understand the nuances of this. At the same time, if Harley Davidson needs to come and nobody buys, right? So that's a different world.
So one more question about the headwind, then I move on. So when you say China has given this $1 trillion surplus, but you see, it's very opaque in China. So with all the tariff walls coming in or coming up now to come up in the United States, it would be, and China has been giving that, it would be easy for China to, or they might also give another round of a stimulus. You think that's going to be some sort of challenge for Indian corporations insofar as this benefits of China plus one strategy that were coming, they might slow down?
In a way, world is clearly trying to move away from China. China has a momentum in terms of their installed capacity, so they are going to continue to increase. Yesterday's news is that the value has remained similar in China. The volumes have gone up, which means for the same amount of dollar, they are actually sending much more goods outside.
Right.
And they might continue doing that.
Right.
But on our side, that is not the case, because we are basically into services largely. At the same time, our industry, which are the exports we have? Some petrochemicals, we have world beaters. Pharmaceuticals, again, we are very nice. 3 years or 4 years back, during COVID, there were full-page articles by Financial Times that iPhone supply chain is so high-tech that no country in the world will be able to achieve other than China.
We're doing it now.
So what I'm saying is in 3 years' time, we started baking, and 4th year, we are now going to probably beat China. Why I'm telling you this is, many of it is PR done by Financial Times on behalf of China or wherever, but many of it is basically also to psych you up, say you can't do it. India is doing it, and now in 25, we are going to start building chips.
Right.
And many of this high-tech part, people are not sort of estimating what is going to happen in terms of their effects on creating more and more high-tech manufacturing going forward. So that's why what PLIs have been done is phenomenal. They have taken the highest level, then the next level, then next level. At the same time, if supply chain of, say, shirts and pants and their buttons need to be worried about, probably we will have to go by the coastal route, which is what China did.
Right.
China did not develop interiors on the first day.
Right.
They took Shenzhen just next to Hong Kong.
True.
And then developed only that part, and then just don't allow that material to come in. Just take it as a foreign country and do it. And that's how the SEZ framework, including just have the port itself in the SEZ so that nothing has to open somewhere and you end up creating jobs and stuff like that. But broadly, what we are doing today, even in interiors, even the PM Gati Shakti, reducing the logistics cost from 15-16% to now less than 10% is a phenomenal achievement, because that's where you are able to take the industry in the interiors.
Right, fair enough. So my second and last question, you see, we did that poll about how many people here have a Demat account, about 60%, a little less than national average, but given that it's a journalistic organization and we are more concerned about stories than making money, still, please tell them, if they invest 1 lakh rupee now in, say, any mutual fund, what it would be in 10 years' time, going by the India story?
Yep, so I'll give you, see, I'm actually an employee, I am not Rakesh Junjunwala. Right? And so not many people come to listen to me. So since you are sitting there, I'll give you the story. That in 1995, I started an index called Nifty. In April...
Nifty 50.
Yeah, Nifty 50. On a base of November 96, I started, November 3, 95. So today we are, after 29 years, that Nifty index is around 24,500 or 25,000. So if you had invested 1,000 rupees in 95, today it will be 25,000 rupees, plus each year you would have got close to 1.5-2% as a dividend. So if you add that up, it would be probably 30,000 rupees. So if you invest for long term in Indian stock markets, but if you keep on buying, selling every day because you watch TV or you watch WhatsApp, somebody sends you kharid lo, bech do. If you invest, if you start trading in derivatives without knowing, then you will lose money.
Yeah.
But if you just stay on any index of your choice, you are going to make at least 3-4 times more money in next 25 years on Indian stock markets compared to any fixed deposits you will put, any real estate you will do, any gold, any other assets you might think of. And this money, when you buy gold, at most it will be in your vault, safe deposit vault or somewhere, and you will always be worried kuch chori ho jayega.
Right.
If you put money in stocks, it will also create jobs for India, right?
Right.
Which is going to be even more beneficial.
It's constructive
for
capital.
everyone.
It's constructive capital. Okay, fine. Niranjan is snapping at my heels, you see. So, last question, and I'm headline hunting. Itna sara IPO aa raha hai, NSE ka kab aayega?
We have no visibility. So whenever we are given approval, we have asked for no objection certificate as a regulated entity. We are ourselves regulators. And so we have asked for the no objection certificate from our regulators saying, can we go for the IPO? Once they give us their green signal, then we'll prepare the DRHP, which is called prospectus, and then we'll again submit to them for giving the clearance to the RHP. And that's basically the process, but currently we have no visibility.
All right, so the lesson is invest and get rich, and not necessarily quick, but for sure. Thank you so much, Mr. Chauhan.
Thank you, sir.
For this conversation.